Assalamualaikum warahmatullahi wabarakatuh, and hi. Today we'll talk about Fintech 3.0. But before we start Fintech 3.0, let me introduce myself first. My name is Muhammad Nazim bin Rozali and my matrix number 2018297568. So without further ado, let us get started. But before we started about Fintech 3.0, we must know about a little bit Fintech 1.0 and 2.0. So let's check it out. Fintech 1.0 is an era where about financial globalization. It starts with technology like telegraph and steamship that allow rapid transmission of monetary information cross-border. The key of the events on this period is transatlantic cable on fed wire. In 1950, MasterCard was introduced to ease the burden of carrying cash. Over the period, Fintech 2.0 was emerged during this period marked the shift from analog to digital, and this can be led by traditional financial organizations. The primary ATM was installed by Barclays Bank that marked the start of the trendy period of Fintech in 1967. There have been various trends that took shape in early 1970, which is establishment of Nasdaq, the world's first digital stock exchange. This establishment has marked the start of how financial market operates. In 1973, SWIFT was established and also the most ordinarily used communication protocol between financial organizations, facilitating large volume of cross-border payment. In 1980, the increase of bank mainframe computer and also the world is introduced to online banking, which flourished in 1990 with the web and e-commerce business model. Online banking caused a serious shift in how people perceive money and their relationship with financial institutions. By the beginning of 20th century, banks' internal process, interaction with outsider and retail customer had become fully digitized. This era ends with the global financial crisis in 2008. There has been shift in thought from retail consumer viewpoint as to who has the capital and credibility to provide financial services. Although it is difficult to see how and where this trend began, it can be said that the 2008 global financial crisis representing a turning point and has catalyzed the development of Fintech 3.0. As a result, the post-2018 alignment of market conditions enabled the emergence of creative market players in the financial service industry. These factors include public opinion, regulatory security, political demand, and also economic conditions. Each of these points is now being discussed in a narrative that demonstrates of how 2008 served as a turning point and create a new generation of actors applying technology to financial services. Bitcoin of version 1 was the first released in 2009, which led to major impact to the financial world, and then within a few years we can see that Bitcoin boom. Bitcoin is a digital payment currency that utilizes cryptocurrency. The advancement of technology are really helpful to the people, especially in finance. In 2010, creation of fintech has startups such as peer-to-peer lending. In August 2010, Funding Circle was launched and it became the first significant peer-to-business offering and lender to small business loan from investor through platform. Peer-to-peer business is practice of lending money to business or individual through online service that match lender with borrower. Since peer-to-peer lending companies offering these services generally operates online so that they can run with a lower overhead and provide the service more cheaply than traditional financial institutions. Next, Google has established Google Wallet in 2011, which allows consumers to use smartphones equipped with a near-field communication chip to make a tap payments. For example, a person simply needs to tap their card on a near a point of sale terminal. Since contactless payment do not require PIN or signature, transaction size on card are limited. The allowable amount of contactless transaction varies by country and bank. In nowadays, this type of payment is more advanced because the consumer just using a paywave where they need to swipe their card. This method is really helpful since we can reduce the time when we need to make a payment. On the year 2015, mobile banking is now established. Mobile banking is an emergent branch of electronic. It is an mobile commerce application based on wireless network and mobile device. Mobile banking has a unique competitive edge over the traditional banking because it allows consumers to perform banking transactions anytime and anywhere. Advantage of mobile banking for both bank and consumer include easy to access, reduction in cost handling bank transaction, and many more. Mobile phone has led the combined effect in improved fintech penetration. Nowadays, people deal with banking system only using smartphone. Most developed economic countries such as China are leading in fintech development with 69% growth rate. Most developed economies have a stable traditional economic system. The average global adoption rate for fintech is 3.33%, while the adoption for the emerging markets is only 46%. Fintech 3.0 has become an era of the startup with an appetite for innovation among the investor and consumer, driving a wave of new products and services. Even established banks are starting to act and brand themselves like startup, and this move away from establishment bank of Fintech 2.0 era has been defining of Fintech 3.0. Thank you for listening my video. So I hope that you will enjoy my video and you share about the information that I just gave you to your family members. So before we end it, please click on button like to show your support my video. So that's all from me. Thank you. Bye. Assalamualaikum.